Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Lynn & Associates with your agriculture update for this Wednesday, the 17th of May, 2017, and we're just after 1:30 p.m. Central Daylight Time. So today, what was up yesterday's down today. So the meal and the beans down a fraction, certainly not big, and the corn up 3 3¾ and the wheat up 2 3/4. The cotton markets, which had all these limit moves up and down fairly hard again today. So we had a limit down yesterday, then we have a limit down, not attempt, but an extenuation of it today, a breakout to the upside in the sugar market. The energy markets are still very, very mixed. They had a good piece of information today in that we had both the distillates and the gasoline have draws. And remember, the API report yesterday showed a number where the gasoline was down 1.8 million barrels, but the distillates were up 1.8 million. In today's report, both numbers in the distillates and gasoline were down. Not big in the gasoline, but nevertheless down. And we're not showing gasoline, if you will, supplies building. We're showing them coming down a little bit as well. As you look at the nat gas, down a fraction here. Now, while I'm still showing the Junes, I'm going to be switching over to the Julys. It's about that time where you can begin doing that. Now, let's look at a weekly chart, and now that May's expired, we'll call this July beans, but it's a continuation chart. And what the market has done is it's moved on up now into an up thrust from 929 3/4. We have the highest close since then at 975 3/4. So that's what I think the market is temporarily doing. You have an up thrust on an area chart of closes from roughly 973 to the highest close was 976 1/4 yesterday, and you lost about a half a cent from that, but still an up thrust, and this is pretty much a resistance point, this 976 level. When you come over and you look at a bar chart, what I see just visually is an awful lot of sideways action. It is certainly not a market that is trending like you were doing here. It is a market that has been having in the month of May an awful lot of trouble going up or down. And you see that, by the way, when you look at the swing lines because they're not trending. What you've got is a pattern of a low that's under a previous low and a high that took out a previous high. There's no stepping ladder effect. Nothing to do off of that. The battleground has been the 18-day average of closes. It was hit 4 days in a row. Today was an attempt to move away from it and not hit it. But in the process, you still had that momentum where you came down and closed a tad lower. And guess where the market's failing on the upside? I want you to look at the black bands and understand what they are. It is an algorithm called a Bollinger Band, and the idea is that you get theoretical resistance and support zones, and that 95% of the time the market will trade within these. Now, the reason it's 95, not 100, is to break out of the bands, eventually you got to get over or under it in order to create a trend where the market starts breaking down. That doesn't mean it can't move the band up or down. It does. But the longer the band goes sideways, like it's doing right now, the bigger the eventual move when it comes out of it. As you take a look at momentum, the momentum of the market is pointing up. So let's explain what we have. We have a swing line that's not trending. We have momentum pointing up, and I'll say the bias is up because you're over the 18-day average of closes, but you've run into an area that continually stops these advances at this point, which is called the Bollinger Band. Support waits for this market around 968. The meal market's identical. First off, you visually can see the sideways action. Momentum is trying to turn up here. The difference in this chart is that you have a lower low and then a higher high. You see, everything gets flipped around on these things. And the 18-day average is acting as the resistance. In fact, this market isn't even strong enough to get to the upper Bollinger Band. But where the commonality is you're stuck in the sideways action of the Bollinger Band and unable to get out of there. the soybean oil, this is how you push the band wider. Now, it's not succeeding getting up and running with it. And if it did, I'd be very surprised if the market didn't run into another brick wall at the 33.68 level, the 100-day average of closes. And like the other two markets of the soy complex, you have no trend. You got a lower low and a higher high. In this case, you have an overbought market. I wish I could tell you there was something to do there. The corn market, how many times do you have to hit the 18-day average to understand the market's not trending? You tell me. I want you to look at all these days that it's hitting this 18-day average. It's not moving to an upper band or a lower band. It's a sideways market, and that's all that you've got. The downtrend, which we had yesterday with these arrows, is knocked out today because today's high took that one out. So what I'll do tomorrow is take the arrow and have it point up here. You are definitively not trending. The wheat is trending to the downside as the market's got lower highs, lower lows, but, and there's a huge but, it is very oversold. So as the market's picking itself up, yes, the resistance comes back in at 434 1/4, but in order to get short there, you're selling into an oversold condition. Very dangerous. Sugar market, what number do you think I'd say that the market has a shot at getting to? I'd say that the upper Bollinger Band's your resistance point. Now, should that get over it and the market ever decide to run, well, the 100-day average is way above the market. I can't say it's not going there, but right now, what I'm saying is first resistance, the brick wall, 1645. I pointed out yesterday something very important to you. If you look at yesterday, I said, this is the first time we've closed over an 18-day average, and I took you all the way back here into February. You now see the importance of that and what the market had done in yesterday's action, and I'll show it to you right here. You already had the higher lows and you had the higher highs. So the continuation, if you go up with momentum pointing up, calls for the 1650 area yesterday. It's 1645 right now. If you get our price counts, we're talking a 1650 resistance area, by the way. In the coffee market, on a seasonal basis, this rally should run into problems around next week. That doesn't mean it can't rally further, but the market often turns down later in May. So I'm just looking to see what it does. And my pattern is a higher high and a lower low. If you'll notice, the market missed hitting the lower Bollinger Band today by about 25, 30 points and went right back to that 18-day average of closes, that line in the sand, as I call it, and it stopped right there. Momentum, flat as can be. No trend, flat momentum. Cocoa market still in an uptrend, but I'd be a bit cautious. Even with the embedded reading, are you going to buy it here to get to the upper Bollinger Band? You could, but why? The risk-reward can't be right. And this is the first time the market's over the 100-day moving average of closes, and it's not picking up momentum. I was hoping it would. I'm not saying you can be short. You can't. The question is it a good buy? Why can't you be short? Because as far as I'm concerned, doesn't mean you, with an embedded reading, it means the bias is locked into the upside. That doesn't mean you don't pay attention to the 100-day moving average of closes. It's a warning sign. It has to do something from there. So let's talk. Where do you think cotton might go? I don't know. When you get over a Bollinger Band, even with a crazy bull market, the odds are you only stay over it 5% of the time. You had 2 days in a row over it on Friday and Monday. Tuesday you closed under it. If you extend this, I'm going to guess the 18-day average at 79.30 is the support area. Momentum is pointing down, but so what? You're still over the 18-day average. So maybe you got too high, but support there, and the market's not crashing on the way down. So my guess is that, yes, the squeeze play's probably over. The word is probably, but you're getting support on this big break. In the cattle market, not surprised to see the market back to the 18-day average, looking for direction. The bias is down. The trend is down. Why? You've got the swing line with lower highs, lower lows. You closed under the 18-day average. The risk is not acceptable in that if you sell here, you got to risk back to over 122.42. For some people it might be, but that's a $1,200 risk. It's awful big, I would say. And you're knocking on the door of getting into oversold territory, but the trend is down. Feeder cattle, trend is down. Lower highs, lower lows. It's the third day in a row under the 18-day average in a very oversold market. I would be totally unsurprised if the market makes a run back to 150.80. Should you ever get over 154.25 on this particular formation, you would reverse the trend to up. I'm not saying the risks make sense. They don't. Nothing I can say there. The hog market remains in the bull camp because it's got the embedded reading. It made the highest high of the move today and closed lower. Okay, it's a reversal day, but that's all you can say. It's certainly not the end of a trend. So I put that all together, try to figure out what to do, and I write about it. Now, I've been writing a lot in my market research about the presidency and President Trump, and I got to get this off my chest. Here is a man that ran The Apprentice, one of the most famous shows of all of its type on television. And what did he do? He fired people when they didn't do right. Mr. President, you got to look in the mirror sometimes and say to yourself, you keep tweeting, it gets you in trouble. You have press conferences, it gets you in trouble. And you got moles in the White House that are getting you in trouble. You should be good enough to tell those people sitting in front of you and put yourself in that position, clean up your act or you're fired. Same to you. Get all the moles out, stop the tweets maybe, and if you're going to do press conferences, go back to what Reagan did once a month. I've been writing about this in my newsletter, and last night I prepared people. I said you're going to see a flight today to quality because people are going to be scared about the word impeachment. You want to read what I write? That's part of it. What about the trades? And we had plenty of them in the currency markets all over the board today. If you haven't tried my research, and it starts off in the morning, by the way, with a video where I cover 40 markets at a time for you. And in those markets, what happens, I give you very specific buy and sells. All I can do in these right here is say, this is what I think the pros are doing. Here's where the market might be. Here's where the momentum plays are. I cannot tell you buy here and sell there. I do it very specific with plenty of recommendations. Think about it. You start off your morning, what if I threw an idea you liked at you? The ones you don't like, you're not going to pay attention to. I back it up at night and write about different ideas on the markets, what's moving them, and buy and sell recommendations. If you'd like to try this, it's a $60 value. It's yours to try free. If you click under us right here on many websites, it says, click for Ira's free offer. If you want to subscribe because you've already had your 20-day access, put in the code IRA20 when you go to our website. It's that simple. And all you'll do is it'll take $20 off your first 30-day subscription. These aren't 1 month. They're 30 days at a time. You can quit whenever you want. I think, add to your library, see what it's about. You can click right up here if you're watching me on YouTube as well. That'll take you right to the form, IRA20. Just type it in. You'll get everything you need. You have a good day. I'm Ira Epstein.